So on the Iranian nuclear deal, I think the probability has been increasing quite substantially over the last few weeks, and there is now a pretty good chance that you'll see that oil coming back onto the market. And I think that that'll have a further substantive effect in terms of loosening crude markets that have already loosened quite substantially over the last few months. So, our view is that you have got a high likelihood that Iranian barrels will come onto the market, and that'll send crude down further.
What do you think has got the oil price down? If you look at it over a 1 month view, a 3 month view, the oil price has remained pretty suppressed. We're trading at right now $95 a barrel for Brent, $89 for WTI. What's driving it?
Well, we've been fairly bearish on the oil price for the last 3 months or so. And when you look simplistically at the supply-demand balances, it suggests that there's plenty of oil around on the market. Clearly oil prices rose a lot earlier this year on the back of worries over Russia. I think the Russian supply risk hasn't materialized. Russia's still pumping a large amount of crude and is able to get that onto the international markets, finding other routes into countries that were still willing to take that supply. I think at the same time, you've had some other countries where you've had increases in production, such as Venezuela and Libya. And I think crucially on the demand side of things, I think what the market may have been missing is the situation in China. I think a combination of the economic slowdown in China as well as the COVID restrictions has meant that Chinese demand for crude oil has dropped fairly dramatically. We look at the oil X numbers, the latest numbers for August suggest almost a 20% or maybe even more fall in terms of crude imports into China relative to 3-4 months ago. So I think that's also a crucial part of the demand equation alongside recession risk. And, we're seeing evidence of lower gasoline demand as well.